Good afternoon, ladies and gentlemen. It is Friday, 28th of May, 2021. Welcome to Hindsight, episode 12, where we learn to be a better trader. Sell in May and walk away might be a phrase that you're familiar with, and if not, you're experiencing it now. Liquidity is out the window, volatility is out the other window, and profitability, well, there's definitely a third window for that one to jump out and take a fucking nosedive. So let's take a look at SHV and the financial report that came out today. This was the half-year report. We're up in revenues 37% to 84 mil, but we're down in profit by 90%, which is a massive number to be down. So let's take a look. In hindsight, I probably should have looked at this as well, and the equity position of 519 mil up from 405. Now, rising equity is always a good thing. And we have a stock that was 750 mil market cap on around $6 where it closed yesterday. So you take off 10%, you've taken off 75 mil off the market cap, and suddenly you're getting that much closer to equity. You know, if I just recall back to my Qantas video, that thing was nosediving all the way, came really close to equity backing, and it was a screaming buy. Now, I'm not suggesting that this is some sort of buy recommendation or anything like that, but it's worth noting that the closer you get to equity, the better a buy tends to be. But again, this is agriculture. I'm not a fan of agriculture stocks. There's not much room for growth and profitability, but the idea is the closer you are to equity, the better it is, provided that the stock is profitable, right? It's increasing its profits, or at least it's not going in negatives, right? So didn't take that into consideration. I probably should have, but it will explain the charts a little bit later and how much it bounced. I posted 15 minutes before open the previous financial report, and it had terrible numbers as well, right? Down 52%, even revenues was down. The full year report was 250 mil, revenues was 25 mil, which makes it really interesting because the previous corresponding period, it was up 37%, so it was 84 mil. So that must mean it was sitting around 60 mil in the first half of the previous financial year, meaning that these numbers probably aren't as bad as they sound, right? So the first half would be around 60 mil, and then the rest of the revenues have come in from the second half. So I'm assuming this is cyclical or seasonal because it's an agriculture stock. They sell like almonds, nuts and shit. I don't know. It's agriculture. So it must be seasonal, and that explains why the numbers sound so bad. And we can see, based on the chart, it didn't sell off that bad. You know, it went down 25 cents and sold off another 10 cents from there. And what we have on SHV, if I bring up the daily chart, we can see it gap down from nearly $6 to $5.40. That's basically a 10% wipe right off the bat, which is perhaps a little bit excessive considering how the stock reacted beforehand based on similar kind of numbers, similar terrible sounding numbers. So what we have, if we bring up the 1 minute chart, and you guys can see here the resistance level and the support levels here. So this was my sell range. I was looking somewhere to start closing my short at 524 and 515. So that was my take profit target for the short, because I did short this on match. Now, liquidity was terrible for this stock. Absolutely terrible. So if I bring up open, so I did end up taking a match. It wicked up and then wicked down, and it was sitting at around this 530, 532 level for about 15 seconds. And by the time I decided that I wanted to close the position, there wasn't much to hit into on the book. So I ended up on average taking probably about 1 tick profit on this one. And then I tried shorting somewhere. I can't remember. I took a terrible short somewhere here and probably ended up losing just a couple of ticks. No real noteworthy trade. It was a terrible decision. But what was forming, though, was this kind of horizontal here. And, you know, it moved up, pulled back, and was starting to swing back to the upside. And that's where I took a long position here on anticipation to the rally to 590, 592. I wanted to take it off a couple of ticks early. It didn't eventuate, and it looked actually quite weak considering it was a break of the opening range. It moved up and took profit. I can't remember if it was this candle or the one next to it, but I did end up flipping it, going short. And let me just extend this trend line here. And the plan was to get to VWAP. So bring up VWAP. The black dots here, it's a little bit hard to see, but that's VWAP. And that was the target. So re-entered short, Didn't even get to VWAP. I wanted to really see it go below VWAP. I still had a very strong short bias, and started coming back up above this trend line here, so I had to start closing out on the way up, and really made just a few ticks there. Didn't flip it long to the upside and hit that 590 target because the liquidity was garbage. Just to give you guys an idea of how terrible liquidity was. The first half hour of any stock is usually the most liquid, right? Most volatile, most liquid. And at 10:21 to 10:22, there was a full minute and a half where there were no trades whatsoever. 0 trades. That's the opening 12 minutes. That's within 12 minutes because this stock opened up at 10:09. So yeah, about 12 minutes into the trade, liquidity was completely fucking off. Didn't exist. So didn't want to actually keep trading this one, irrespective of the chart. I was trading in small size for this one. You couldn't really go larger than 1,200, 1,500 shares. You could probably scale into about 1,500, but the book had about 350 to 600 shares per line. And occasionally you'd have like a 2K stack, maybe a 3K stack. And those got munched very quickly. So it was not a great stock to trade. Liquidity's down, volatility's up, and that's a terrible thing. That's a terrible thing. I would rather have more liquidity and less volatility because you can at least put size on and make every tick count. And then when you have more liquidity, the chart tends to make more sense. It's a lot more respectful of VWAP and breaking opening ranges. So this one was a pretty shit trader for me. Look, still ended up green on it, but it was terrible. So here, for example, you break a trend line, it starts swinging down, doesn't respect VWAP, and then for whatever reason, it just breaks right back above VWAP. It's just there's no respect of major levels or key levels, and that's what happens when there's no liquidity. It's shit to trade, really shit to trade. So got some coin out of it. There was a lot of preparation behind it, a lot of ideas behind it, but no liquidity to really hit out and make things very clean. So we have Z1P that I moved on to. This one, I was just looking for a fade, really just waiting for the swing down. Bounced off VWAP, didn't have much conviction there in holding the VWAP. A lot of sell pressure came through, so I took a short at 722. It came down and I was targeting this horizontal here, but instead it missed it by a couple of ticks, and I was actually planning to take some off here and then look for further selling. Didn't eventuate and missed the target. So it started swinging back up. I was a little concerned about the volume break of VWAP, but there's one thing I have in the back of my mind about Z1P, and that is it likes to fuck around on long breaks of VWAP. So I held on to it. Probably a terrible idea on any other stock, but this is Z1P. It doesn't really respect VWAP as much. And it started coming back down, and I wanted to close out on this little horizontal here. I didn't want to risk holding into the bottom range here. Just took profits where I could, and liquidity was down for the day. There was no interest anywhere on the market, so I took profit where I could. I was expecting this to range trade, and it did, but again, liquidity's terrible. And what do? There's like a trend line here. And what do? You can't really take a long position here. It's not the most comfortable thing to do. You can probably take one here as it starts recovering, but again, didn't feel too confident there. Had to wait for maybe a break of trend and then break it. Look at the volumes here. Garbage. As it comes up to VWAP, garbage. You have this little spike of volume here where nothing happens, and then maybe you take position here as it shoots up to 723, 724. And then where's your target? This horizontal at 727. You can make maybe 2 ticks before it gets there. It's just really not that great to trade. There wasn't much else on today, not that at least that I traded. And I was on for most of the day as well. So sell in May, walk away. It's not financial advice, but hey, it's a saying for a reason. Liquidity's down. And it's interesting to open up YouTube and browse other ASX channels. The vast majority of them don't seem to know what they're doing. Have a look at some calls between earlier this year to now, and you see all these YouTubers that they were successful in 2020 with their channel and with stock trading because everything went up. They only have access to the long side, and they just went long on everything, and everything made money. And they thought they were geniuses. Look at this earnings per share, and they look at these other financial figures that have no relevance whatsoever, and then they look at the technology of the stock, and they go, oh, it's good. They have no understanding of market capitalization whatsoever, and so whatever they bought went up. Subscriber count goes up, make money on ad revenue, goes up. And all of a sudden, now that the 2020 mania is over, the liquidity's down, the stock market's acting a bit more rationally, volatility is down as well. So, volumes are down, it's sell in May, walk away. They haven't experienced this, right? And it sort of makes me warm and fuzzy on the inside to know that they're going to be disappearing soon, because they really are toxic to the community, for the trading community, to the investing community, because they don't know what they're doing. They're not experienced. They do a little bit of marketing, the clickbait thumbnail shit. They're in it for the YouTube revenue. And, these guys sort of congregate together and sort of create content together. And it's just kind of sad, really. It kind of reminds me of these Instagram lifestyle traders, but, these guys don't take it to that level. Instead, they're sort of like a figure, a face for trading, a face for investing, and really they don't know what they're doing. Just look at some of the calls that these guys make in, earlier this year. A2 Milk, some were doing Kogan, some were doing Temple and Webster, and these stocks are getting hammered because they actually don't know what they're doing, and they're slowly going to disappear. And wow, this sounds really bitter because it's the start of the weekend. I shouldn't end it so bitter. So, guys, have a good weekend.